traders, welcome to the TMT stock market strategy video for Tuesday, November 22nd. Well, markets continue to grind higher, making new all-time highs. About 8, 9 trading days, and we're up about 14%. Absolutely insane. Algorithms run and rule the markets, guys. Bottom line, markets right now very, very grossly overbought, and we need to be careful here and use caution. Now, does that mean that we just continue, just close our eyes and buy? Absolutely not. You look for that high probability trade, and sometimes you don't get it, especially that the markets have pretty much gapped up every day since Trump was elected. So you need to really use caution. Does that also mean that is it possible that the bigger players try to get everybody long and then sell into the rally? Of course, that's how they do. They buy weakness and they sell strength. So you have to be careful with that as well. Do I think anything big is going to happen between now and Friday? No, I do think that markets will continue to grind higher, maybe have a little bit of a pullback. But what you need to really be aware of is that we are extremely overbought. I mean, remember, Russell is now probably about almost 14% in 12, 13 trading days. That's a year and a half worth of gains in 13 days. Do you buy the Russell up here? Absolutely not. I wouldn't chase anything up here, especially when you have a gap up every single day. Every day we have a gap up. You have to be careful. Even day trading, looking to buy, you can't short anything because that's what the administration wants you not to do, is short any stocks. So you can't really do that. That's a little difficult, but that's going to change. And remember, the rally is on the hopes that Donald Trump is going to do what he says. That's hopes. So, which is insane that anybody would purchase or buy stocks on that. But the thing is, this is what we're dealt with, so we need to know what's going on. I do believe in the next 2 to 3 weeks is going to be pretty exciting. We need to get through Thanksgiving, and I believe at least 2.5 weeks of some really, really good trading before the end of the year. Rates continue to rise, right? The dollar continues to rise. Bonds are getting crushed, and no one really cares. Well, that's going to change, and you're going to see that in the coming days and weeks. That when the dollar is being well bid up, as you can see here, everything needs to be repriced, okay? And that's going to hurt a lot of the multinational companies. Rates rising is not going to help. And even if the Fed raises in December a quarter of a point, now they think, oh, it's not a big deal. But once they get into that rate hike mode, we have inflation now that's brewing, and I think that everything here, that what we see here, is going to be repriced, okay? We have a fully valued market. So you buying, again, everybody, the general public buying stocks up here, thinking that we're going to go to, even if we go to 2,300 in the S&P, you have a fully valued market. There is no discount in buying stocks. So you have to use caution, okay? Let's get right to it. You can see the dollar here. I do believe this move is for real, and I do believe that, yes, we probably will come in a little bit, even possibly fill the gap. But I do believe that the dollar is on its way up. And again, things do change, but you need to use caution. And I think that if the dollar is moving higher, commodities will move lower. And you could see the GLD, we talked about it. Nothing really happened yesterday. We had an inside day. You could see that here. We lose this. Remember this thin zone we talked about. So I'm looking for a big push lower. That spike lower is something that you guys should pay attention to and possibly nibble in gold if you guys are looking to buy gold. Same thing here with the GDX. We haven't gotten quite to our target of 61.8% retracement, but I am looking for a big push lower and into this zone, anywhere between $18 and $19. Let's go with 18 to 20. That's going to need to hold. Otherwise, again, remember this thin zone. We can get back to January of 2016 lows. Okay, that's the GDX. Spiders, what can you say? Just absolutely insane from the low of 208 to 220 in, I'd say, I think it was about 10, 11 trading days. Just absolutely insane. Absolutely insane. And like I said, guys, if you are not investing with algorithms, high-frequency trading, you are definitely behind the curve. That's for sure. This market is ruled by the algorithms, computer trading. There's very little humans now trading these markets, okay? And you need to know how to trade these markets. And if you don't, drop us an email at support@tradingmarkettechnicals.com, and we'll show you the way. Spider 60 minute, you could see. Here is the transports doing quite well. But again, on hopes that Donald Trump is going to spur small business. And then we had an explosive move up. Quite bullish, but you could see how a decrease in volume that we've had, all right? We've had very low volume. I understand it's to be expected because we are in a holiday mode, but you have to realize, if volume is not going to support this move, what is? I mean, you have to really use caution here, especially when you're trading with these with volume that just literally just drops off a cliff. And you could see here IWM, Russell 2000 just running really rampant, and now we'll have these small little candles. That means that the momentum is exhausted, and at one point in time we'll probably end up coming back down here to at least fill a gap here, here, and here. Remember, gaps pretty much 99% get filled at one point. That's the question. We don't know. And you can see the cues here just basically in range bound mode, all the way back from August. So let's keep an eye on technology. I think technology is going to be pretty big, and we need to really see what happens going into the end of the year and 2016. Last note, remember what I mentioned. Rates rising last year, same time, we had a market meltdown at the end of December when we started the market meltdown. The first day back in 2016, we went down for 8 straight trading days in a row. I mean, literally massive liquidation. You have to use caution. History does repeat itself. Remember that. Have a great day, everybody. We'll see you tomorrow. Take care.